my YouTube channel. Welcome back. Today we have more news coming out from the stock market. A lot of stuff for us to talk about since great data has just been released this morning, and we are seeing the economy is slowing down for sure as of right now. And inflation has peaked, and we are going to continue to see inflation to cool down. So let's look at the total crypto market right now. The total crypto market cap continued to crumble under $1 trillion, folks, as the US dollar index hit 20-year high. Right now, investors are jumping into the dollar, and foreign investors are leaving their local currency, and they are betting very big into the US dollar here. So when we have a strong dollar, the market does not perform very well. And that's mean we are going to continue to see more tighter policy within the next couple of weeks here. Total crypto market cap dropped 7%, nearly 7% in 1 week as US dollar continued to rise. That is just what we are seeing. Let's look at here. This is our latest chart from the market, talking about the global crypto market cap here. So this chart was provided by TradingView. So let's see. So from August the 15th, we have seen the global crypto market cap hit nearly $1.2 trillion here. And moving forward to September 1st, and this week of September, we have seen that it has crossed under $1 trillion. So right now, the crypto market is under intense pressure from the Federal Reserve, since they are planning to hike up another 75 basis point, which really stir up this bear market. That's what we are seeing as a result. So a lot of pressure will continue to grow, and this will be applied the same thing for the stock market as well. So that's what we are seeing. So right now, great data have been released from the market. Investors are very worried that the Federal Reserve might hike up another jumbo rate hike this September, which we are going to hear within the next couple of weeks here. So there's a highly chance that the Federal Reserve might do another 75 basis point. So their main goal right now is to tame inflation while putting the U.S. economy at risk of entering a recession here. So a lot of stuff are coming out as a recession concern are continue to mount. We have seen the U.S. stock market has struggled in the afternoon. Right now, their industrial Jones lost more than 200 points in the afternoon, dropping nearly 0.6%. And let's look at the Nasdaq Composite, slipped 1%. And the S&P 500 slipped 0.7%. What's really shocking is the U.S. economy had added more than 315,000 jobs in the month of August. So that is what we are seeing and hearing according to the Labor Department on Friday. So market expectation is 318,000 jobs were going to be added. So we kind of near our expectation, but however, we did miss market expectation this week. However, in the month of July, the U.S. economy has added more than 526,000 jobs in the month of July alone. So with this two data that has just been released within this 2 months, the Federal Reserve gonna hike up another 75 basis point. That is what we are going to hear, and that likelihood of doing so is very high, very high. So Friday, important data was gonna be released on Friday. Non-farm payroll, which we have talked about. 315,000 jobs were added in the month of August. Unemployment rate rose to 3.7%. This is really scary, folks. This is really getting scary. Tighter monetary policy, we are going to see a slow economic performance, and unemployment rate is going to be a headache for the Federal Reserve. Average hourly earning up 0.3%. Labor force participation rate is around 82.8%. Factory order is negative 1%. This is what we are seeing. Decline in business activity, especially within the manufacturing side. That is what we are seeing. Slow economic growth is just the beginning, folks, and we are bracing for a bear market coming up. Let's look forward. U.S. factory order dropped sharply in July. This is what we are seeing as tighter monetary policy. We are seeing less demand from the market as companies are now ordering less product because they want to get rid most of their inventory. So recession concerns are rising, and as consumers continue to be very cautious with their spending. This is what we are seeing as a result, according to the Commerce Department report that order for manufactured goods fell sharply 1% in July. So economics expected that there's supposed to be a 0.2% increase, but however, data came out really shocked the whole market. So the factory sector, which had led the economy in recovery from the pandemic, has started to struggle. Durable good order fell 0.1% in July, revised downly slightly from the initial estimate of a flat reading. So recession concerns are very high, folks, and we are preparing for that mindset as of right now. Order for non-durable good within 1.9% in the month. That's the biggest drop that we have seen since the shutdown in April 2020. So right now, this is just less performing. The market is really bare, and we are bracing for a crypto winter and a stock turmoil. So U.S. job added 315,000 jobs in August. So right now the job market is very strong, folks. Very strong. And even though we are seeing an economic slowdown and worry about recession growth, but however, the U.S. economy is very strong, and the Federal Reserve believes that the U.S. economy can survive tighter monetary policy. But really shocked people as unemployment rate rose to 3.7%. That is very shocking coming out from the market. So they say the current unemployment rate that we had just received from the market matched a 50-year low set in 2019, shortly before the outbreak of the coronavirus. So this is just what we see in tighter monetary policy are continue to grow, and as recession concerns are continue to mount. So the market is very strong despite the fact we are in a bear market. Let's look forward. U.S. stock had for third straight weekly loss after giving up gain on Friday. So people are now fearing for the Federal Reserve to hike up another 75 basis point, which we are going to see this month. In the month of September, we are waiting for the Federal Reserve decision, which will play a very critical decision in decide whether or not the stock market will continue a bull rally or a bear market. That is what we are seeing from the market. And then what are my thoughts with the market as of right now? Recession concerns are continue to mount as tighter monetary policy is still on the table and the Federal Reserve is not backing down. So we are preparing for that mindset as recession concerns continue to grow. Thank you, everyone. Have a nice day.